In this example, we're going to look at the Euro-US dollar cross once again, and Federal Reserve Chairman Alan Greenspan, in fact now it is Ben Bernanke, and on this occasion he's to deliver a semi-annual monetary policy report to the House Financial Services Committee in Washington. And often the market's focus on these discussions, or the minutes of these discussions, are typically around the Fed funds rate and any changes or potential changes to the Fed funds rate. Here we see a chart of the Fed funds rate. We see on the left hand side the changes in the Fed funds rate since January 2002, and we see over time and the percentage change from a year ago. So we see that the Fed funds rate has been dipping, and we are actually starting to see a potential sequence of up moves in the Fed funds rate. As a result of Alan Greenspan's comments, the US dollar really takes a beating, and although the comments for the US dollar were strong following his comments, what happened was after there was a question period, and when Greenspan was asked about his comments, he really had very little to say to kind of give the market confirmation of the direction that the Fed was going to take concerning interest rates. So for some reason, speculators began selling their US dollar positions. And really, I'm not here to rationalize what the market does or why they do it, but we just look at the facts. And today's move really would have been a tough call, as we're going to see. But what happened was the bond yields really started to rally, which can happen as a result of strong data. But then bond traders interpreted Greenspan's scenario as further moves to really acquiesce the inflation issue, which would mean that there is potential Fed tightening or raising of interest rates, and for some reason the market took on a new direction. So let's look at the chart here. We have the market was waiting on Greenspan's comments. This here is the start of a new day, and the market is waiting for Greenspan's comment here as the market moves into this pennant formation. When he makes his comments, the market reacts positively for the US dollar, negatively for the euro. Then when Greenspan was open to question and answer period following the release of his comments, for some reason speculators interpreted his lack of commentary, or they were unsatisfied with his response to the questions that were asked, and then the market began actually to interpret that as perhaps somewhat negative for the US dollars and began moving, selling US dollars. And really it's a tough move, although we do see a nice head and shoulders pattern here. And when the market fell here, if the move was fast and really started to show weakness at this point, we would actually want to look at our pivot points and other technical factors as to where this is in the market. But a good place to buy potentially is when the market moves back up above the moving average, or actually confirms the formation of the head and shoulders bullish pattern.